Futures trading explained for complete beginners. Have you ever wondered how traders can make money when markets move up or down? Or why professional traders love futures markets? In this video, I'm going to explain futures trading in simple terms without confusing jargon, so you can understand how it works and what you need to know before risking a single dollar. Welcome back to the channel. If you're interested in futures trading, day trading, or learning how the financial markets work, make sure to subscribe and turn on notifications. This video is for educational purposes only and is not financial advice. My goal is to help you understand futures trading from the ground up. Let's start with the basics. A futures contract is simply an agreement to buy or sell something at a future date for a specific price. Originally, futures were created for farmers and businesses to lock in prices. Today, traders use futures contracts to speculate on price movement. The most popular futures markets include stock index futures, crude oil, gold, treasury bonds, agricultural products. Many day traders focus on stock index futures because they offer liquidity and nearly 24-hour trading. If you've heard traders talking about NQ, they're referring to the Nasdaq futures market. The NQ follows major technology companies and can move quickly throughout the trading day. Because of its volatility, traders can potentially find opportunities in both rising and falling markets. Futures traders are trying to capture price movement. For example, if you buy a futures contract at one price and sell it at a higher price, that's a profit. If you sell first and buy back at a lower price, that's also a profit. This ability to trade both directions is one reason many traders prefer futures. One of the most important concepts is the tick. A tick is the smallest price movement a futures contract can make. Every market has a different tick value. When traders discuss risk and reward, they're usually thinking in terms of ticks rather than dollars. This is where most beginners make mistakes. Many new traders focus on how much they can make. Professional traders focus on how much they can lose. Before entering any trade, ask yourself, where is my stop loss? How much am I risking? Is the reward worth the risk? Protecting your capital is more important than chasing profits. Here are 5 mistakes beginners often make. Number 1, trading without a plan. Number 2, using oversized positions. Number 3, moving stop losses. Number 4, revenge trading after a loss. Number 5, focusing on money instead of process. The goal isn't to get rich today. The goal is to become consistently profitable over time. To begin learning futures trading, you'll need a futures broker, a trading platform, practice account, a written trading plan. I strongly recommend practicing in simulation before trading real money. Treat sim trading seriously and focus on building good habits. Remember, futures trading is a skill. Just like learning a profession, it takes time, practice, and discipline. Most successful traders didn't become profitable overnight. They focused on managing risk, learning from mistakes, and improving one trade at a time. If you found this video helpful, hit the like button and subscribe for more futures trading education. Comment below and tell me, what part of futures trading would you like me to explain next? And remember, protect your capital, follow your plan, and trade smart. Educational content only, not financial advice. Trading futures involves risk.